Hi, I'm Eddie C. of Purchase Rationale and also the author of Trend is Friend. Good day. The date today is 16th February uh, 2023. It's Thursday and the time now is 12:57 p.m. Malaysian time. Purchase Rationale rationalizes 15 reasons when considering a particular stock. However, I must put forth a disclaimer that whatever I share here is purely for information and education only. Should you decide to take action to purchase anything after our discussion, first please consult a financial planner or a licensed broker. The stock in focus today is something new, not revisited. It's a plantation stock, and the stock is called Hapsing Plantations Holdings. Okay, HS Plant. The stock code is 5138. 5138. Okay. Uh, okay, let's get to the fundamentals. Since it is a new stock that I've not done before. Okay. First, we take a look at the operating earning yield percentage. What it means is that should there be a differential between the intrinsic value and the current market price, the operating earning yield percentage should be able to address the differential that occurs between the two of them. It also means that at 14.21% over here, okay, it means that Hapsing is able to address the differential, or also means that the current price of Hapsing at 2 ringgit and 4 cent at the closing just now is still considered a good buy. Okay, uh, and if you should look at the magic formula side of things, if you add operating earning yield percentage of 14.21 plus the ROIC of 12.15, you get a total of 26 to 27%. All right. So magic formula requires actually 15 and above. That is actually my figure that I take 15. So at 26 to 27, it means it fulfills the requirement of the magic formula. All right. It has a low enterprise value to EBITDA of 3.4, also indicating good value buy from the acquirer's multiple perspective. And actually, magic formula perspective is EBIT over enterprise, but we since trading view does not have EBIT over enterprise, we use the inverse of enterprise value over EBIT at a low 4.49, indicative that it is still a good value buy, all right, at the current market price. PAC ratio 0.08, meaning there is still plenty of room for growth, all right, and expansion. Okay, as long as this PAC ratio below 1, it indicates that this stock still has lots of growth factor into it. Okay, uh, pays good dividend, dividend yield percentage of 8.63%, positive free cash flow of 241 million, a very good F score. Okay, F score measures actually the profitability, the leverage level, plus the efficiency performance of management. Normally, 7 is good enough, but in this case, Hap Seng scores 8, meaning it is excellent. Okay. The Z score is actually the bankruptcy score of 3.14. Normally, we take 2.5 as the standard normal, but since it is above 2.5, meaning Hap Seng will not face any bankruptcy issue in the next coming 2 years. Okay, market cap is a average market cap company of 1.63 billion. All right. Uh, this magic formula requires us to look at companies between 500 million to 3 billion. And Hap Seng is somewhere in between, but at 1.63 billion, has a very strong current ratio of 10.24, meaning it should be able to meet its current commitment to borrowing. And actually, there is no borrowing because uh, it has a net debt of negative 3.68, meaning it is a net cash company, right? And also, the net debt to EBITDA is minus 1.04, meaning the current earning uh, of 14.21 operating earning yield more than compensate the expenses or even the borrowing. Very strong retained earning, meaning in the previous years, Hap Seng has been performing and have a strong retained earning of 408 million. All I can say is that Hap Seng is definitely a investment grade company, all right? Strong in all fundamental aspect, and you can continue to expect it to search forward in the coming times. Okay, how about the sentiment then? Let's take a look. Let's take a look at the chart now. Okay, uh, as of January this year, uh, we suspect that Hap Seng has hit the bottom and is now reversing and ascending upwards. Okay, so as of today, we can see that the price action has crossed above the cloud and it's what we call a momentum buy. All right, the entry strategy is a momentum buy. All right, so trend wise, it is at the beginning of a trend, has not confirmed because it is still below the MA233 line. It's just that I have seen a golden cross over here, all right, where the MA21 line crosses the MA55 line and the price action is above the cloud. So this is an early stage of what I call a trend being formed, but it could easily also come down again, but it doesn't matter. I'm just discussing it because based on the previous fundamental that I have discussed just now, it is likely that Hap Seng will begin to trend upwards. It may correct a few times over here, but that doesn't matter because the fundamental will support the ascending trend. Okay, so on the momentum side, if we look uh, at the two factor, meaning the price action is above the MA21 lines, all right, and also you can just see that the ROC, rate of change, has just touched and crossed the zero neutral line. Okay, beginning of the momentum. Okay, so yeah, like I said, the entry strategy is called momentum buy. And if you buy at 2 ringgit and 4 cent at the closing at 12:30 just now, with a target price of the next uh, of the next if you look back here, of the next apex, previous apex of a higher low, all right, at 2 ringgit and 35 cent, all right, and a cut loss of 1 ringgit and 89 or 1 ringgit and 90 cent. You will have a reward to risk ratio of 2.18 times. Okay, so the volume has been building up quite recently, although today the volume has not breached the relative one or the average 90-day average. But I suspect that given that the coming times when volume sees a breakout plus a price action breakout at say around this level at 211, then it is likely that it will be able to achieve the given target of 2 ringgit 35 cent, right? So I'll just share this information with you. And what do you think about the suggestion? So if you think that the trading idea I shared just now on HubSync is informational and educational, please like, share, and subscribe. If you like, it helps the channel grow, and also it also helps me and my channel to improve from the algorithm side of YouTube, right? And if you share, then people like you and also other interested investors uh, who are interested in learning more about such trading new ideas will be able to watch too. And when you subscribe, you will be able to receive future notification of new videos that I make of similar nature. Thank you for listening and your precious time. Have a good day and bye bye.